Ah, what's up, Jolyn?
What is up?
You
This
know,
is the question.
a lot of things. You know,
I like your shades.
well, I'm gonna wear them all episode because you like my spectacles.
Yes, you know how I feel about spectacles. Okay.
Well, we
Yeah.
gotta look at the world through a ton of different lenses today, and
I
I felt like it
see.
was very, very fitting. But first thing, I have to give a huge shout out to the guys over there at Shady Side Up. I
Yes.
asked and they delivered. I asked for some aviators,
Mm-hmm.
and they were like, "Yo, we could do that." And then guess what showed up?
They, they flew down. All right.
Something like
Now
that.
boarding. You look hella bougie.
You know,
Bougie.
bougie is my favorite color.
We know. Bougie, shady, petty. All of that.
Yes. Well, what's up, everybody? I am Mark Monroe, accompanied by my wonderful co-host, co-producer, and good co-creator and great friend, and of course, coming through, rocking with the leather and that shirt. We're gonna have to talk about that because that's pretty fly within itself. Give it up for the wonderful.
Oh, I thought you were gonna say something more. I didn't know it was gonna stop
Oh,
at just
oh,
wonderful.
oh!
Okay, I see how
But
you feeling on
I'm the
a
bougie one.
Thursday. Okay, okay, I see how you feeling on a Thursday. What does it, cousin? Is jolyngc and the place to be. Happy Thursday and Black History Month. How y'all doing? We
Yo,
got Team Boots in the building, according to the chat.
yes, Team Bougie is in full effect. Shout out to the Bougie Bowls out there. Shout out to, you know, the Shade Gang. We are like, yo, we out here. You know what? I feel like though, Jolene,
Mm.
I strongly feel like it's me season. Like, me season is in full effect, and if people are not on board for that, then that's okay.
What's the reason for the reason?
Honestly, 2021 went through a lot, and 2022 is all about protecting energy and also like bringing even further just good energy into the space. There's a
Mm-hmm.
lot of cool things that are on the horizon that I'm really, really, really excited for to like, just give to the culture. So honestly, I'm just in that space, and when I feel like I'm in that space, innovative things happen, good things
Mm-hmm.
happen. So
I feel you. You know, the vibes for this year, like energetically speaking, for me personally, I feel a new infusion of galactic creativity.
hmm.
You know, I had some things come to mind that I wanted to paint. Some of y'all don't know that I am a legit, for real, like artist out in these streets, like awards and stuff. But, you know, a galactic catalyst of many talents. And so getting back into um, painting has been something that is is brewing up. So stay tuned for that collection, for the drop of that collection. That's all I'm gonna say. That's
Okay.
all I'm gonna say.
Well, you know what? While we're getting ready for that, you can definitely hit the
Mm-hmm.
subscribe button down below, and also go ahead and smash the like button. And on top of that, you can be like Kwame, who is always forever rocking it at number one for the most part.
It's
It's
insane.
saying,
It's,
uh, Kwame, we just salute you because honestly, almost every week you just be straight up on it. I know that there's a lot of cousins that be trying to come for that spot, but hey, you're here. And if you want to be like Kwame, and if you want to try to challenge that spot, go ahead and hit that bell so that way when the videos go up, you can be like Kwame and be like, yo, click, I am here, present and accounted for. So Jolynn,
yes.
are we there yet?
That is what I've been asking. Okay, are we there yet? I'm in the back seat looking around the scenery like, are we there yet? I see some ups, I see some downs, I see all kinds of stuff. But that is a great question. Are we there yet? Well, let's look and see where the market took us today. We have the Dow coming in at negative 518.17 points. The S&P 500 was negative 111.94 points, followed by the Nasdaq coming down negative 538.73 points. And which, you know what, that brings us to a level of, pull it up right quick. All right, we have The Dow now is at a level of 35,111.16. The S&P 500 is now currently occupying a level of 4,477.44, and the Nasdaq is below the 14,000 level at 13,878.82. Heading over to sector performance, as you know, Mark, there are 11 sectors. We like to track the top 3 and the bottom 3 so we can see what that rotation is looking like. We have consumer staples holding it down for number 1, followed by utilities and health, both negative. In fact, consumer staples is the only one that was positive today. Then we have technology, consumer discretionary, and communication services in the bottom. As you know, Facebook took a major L and had to scrape the bottom and brought down communication services with it. Heading over to pick performance, you can find all of the Come Up Series top picks at that Come Up Series on our Instagram page. And as was indicated on Tuesday, if you watched, you'll know that the announcement was made that the new pick list will happen, will be posted after we see what the Fed said. Okay, so we will see what the Fed is talking about, and that will dictate, who those runners and winners will be. But we have TBT, which is the Treasury bond, holding it down at the number 1 spot. And oops, I forgot to tell y'all that the VIX was at 24.35 and the 10-year Treasury note is now over 1.8, coming in at 1.845%, which makes sense as to why TBT is leading the pack for our pick list, coming in at 1.54 percentage points to the upside. We have Hood, aka Robin Hood, also positive 0.93 percentage points. Then the rest of the pick list is in the red. We have State Street at negative 0.49 percentage points. Then for our bottom feeders, we have Twilio, we have Square, and we have Snap. But hold on, we have much to say about Snap. But Twilio was negative 8.71 percentage points. Square, negative 11.00 percentage points. FinTech is taking a major dip, scraping the bottom, dropping it down like it's hot, whatever. It's down there. Then we have Snap. Okay, so Snap before the market, at market close, it was negative 23.60%. I want you to look at Snap because Snap is seriously staying on brand because Snap snapped. Okay. Now it is up 59.18% in the aftermarket, and we will see if it holds overnight or if it continues on running. We're going to see what happens. So congratulations to you, Snap. Also, Mark, we definitely got to get into those earnings for Snap and FTNT. They had earnings after the close. And let me see. We also have some Black history thanks to Brian Clayette, the Come Up Series historian. He has checked out some curated history, Black history, from the amazing sisters over at 28 daysofblackhistory.com. Y'all might want to go check that out for some history. So there was this Negro History Bulletin that started in 1937, and it was a monthly printed newsletter created by Dr. Carter G. Woodson. It provided a comprehensive overview of Black history during a time where traditional education prioritized anti-Black sentiments. Dr. Carter G. Woodson was born in 1875 and passed in 1950. An educator and a scholar, author and historian, Dr. Carter G. Woodson devoted his life to the preservation and education of Black history. His time spent pursuing higher education taught him that the official school curriculum was designed to uphold anti-Black sentiment, only contributing to the inequities in society, much like today. He is most known for establishing a Negro History Week in 1926, which led to the appointment of Black History Month that we celebrate and often commercialize today. Woodson chose the second week in February because it contained the birthdays of two major influences in Black life at the time: Abraham Lincoln on February 12th and Frederick Douglass on February 14th. I did not know that part. Related, born into slavery, Douglass didn't know his exact birthday, but he chose to celebrate on February 14th. Here is a quote from Dr. Carter G. Woodson upon founding Negro History Week in 1926. We should emphasize not Negro history, but the Negro in history. What we need is not a history of selected races or nations, but the history of the world void of national bias, race hate, and religious prejudice. Shout out to all the ancestors on this. What is this, the fourth day or third day?
It is the third day.
Okay. On this third day of a Black History Month.
Well, where do we begin?
Let's look at earnings. We do have some questions too, but let's look at some earnings. Oh, earnings. Let's reflect. Yeah, market breakdown. Let's reflect on these Elliott waves so we can, put on the record where we are. Since the question is, yeah, I'm ready. Since the question is, are we there yet? Well, let's ask these waves, see where these waves are taking us. Yeah, and then we have some questions. So
okay, so should I start with earnings first?
Yes.
Ooh, okay. Well, if you see the yellow in my eyes, because it's just so bright. It's probably because of the fact that, there's just so much snapping taking place. Like, it's a lot. Like, whew. This is how bright their earnings got for me.
Talk about it.
Okay, well, let's do it. Ladies and gentlemen, I'm Mark Monroe, and this is Snap Q4 2021 earnings slides. Okay, so let's look at let's get the obvious stuff out of the way. So revenue had increased 42% year over year to reach $1.3 billion in Q4 of 2021. A little bit of back history about Snapchat. Since they've been public, so since they've come to the publicly traded market, since the, pretty much since the time that, like, when they came to the board, like, they were not a profitable company. And I, for one, honestly, in the beginning, didn't really believe in Snapchat until essentially I started taking a closer look, which ultimately led it to making it to the Come Up Series pick list. And the reason why was because of the fact that I remember once upon a time when looking at companies, you got to look at it not only just for what it is today, but also for what it can be. And ultimately, the leadership and what is it that they're doing and how is it that they're executing. And I started seeing some things. The one thing I can say about Evan Spiegel is the fact that, from the moment that the challenge was laid down from Wall Street and many other people, he wasn't the type of person to just be in the media and everything else. He hunkered down with his team and ultimately said, okay, hey, well, what is our identity? And let's stick with that. And ultimately, they went through some rough periods of time as it pertains to some rebrandings and everything else. But for the most part, here we are today. A profitable company that we can literally say for the very first time, they reported their very first profitable quarter. So shout outs to them. We want to make sure that we give Snap their flowers, because it's not every day that essentially that you can see a company that makes a turnaround in that period of time. Sometimes essentially that those moments are defining. And in this, Evan Spiegel was defining that moment in which that he stuck by his guns and stuck to the script, and thus Snapchat is now profitable. So congratulations to them. Average revenue per user increased by 18% year over year to reach $4.06. So when we say that, then essentially monetizably, then essentially what you're saying is that for every user that uses Snapchat, they collect $4.06 in that quarter per user. So that's essentially the average that they earn on behalf of every user. It goes to show you that essentially that the user value will probably start to increase from here on out. Operating margin improved to 2% in Q4, or improved to 2% in Q4 compared to 11% in Q4 of 2021, or negative 11%. So I guess, we're still in the negative, but we're getting there. Adjusted gross margin improved by 66% in Q4 compared to 59%, almost 60% from last year. Kind of funny that they're like that 59% from Q4 is the same percentage in which that Snapchat is up by in the aftermarket, but that's neither here nor there. Probably just a misnomer. Net income improved by 136 million year over year to 23 million in Q4 of 2021. And then essentially let's get down to some of the things where we like to see, which is, say for example, the cash. Operating cash flow was 186 million in Q4 of 2021 compared to negative 53 million, so thus profitable. Free cash flow is at 161 million, which was compared to the negative 69 million in 2020. And then ending cash and cash equivalents and marketable securities were 3.7 billion as of December 31st. So congratulations. Let's look at some of those highlights. Daily active users is aka known as DAUs were 319 million in Q4 2021, an increase of 54 million or 20% year over year. So still double digit and not teen double digit, but double digit year over year growth. Year over year growth in daily active users has been 20% or more for 5 consecutive quarters. Daily active users increase sequentially and year over year in each of North America, Europe, and the rest of the world. So that is pretty cool. So how do they do it? They invested and innovated in their augmented reality platform. On our 18 New Year's Eve lenses generated more than 6 billion impressions. So that lets you know that it was pretty actively used. They released several enhancements. So pretty much Lens Studio, Sounds Library, Real World Physics, all those wonderful things. And then, of course, putting it together in an API library for it to tie. So when we say API, Application Platform Interface, which means that essentially you can connect the services that this company builds and essentially pull those services and data if you're building a platform that's third party to work side by side with them or essentially be as an extra add-on to the platform. Lens creators can now include a call to action link within a lens, making it easier for lens creators to grow their business. We partnered with the Great Barrier Reef Foundation to launch a new water segmentation, so some ESG work there. And then we rolled out Food Scan, the newest improvement to our camera that uses the powerful visual recognition capabilities of Scan to understand different food and ingredients and provide recipe recommendations. So this is also built by, if you look at some of the acquisitions in which that Snapchat has made, you're starting to see that also, you're starting to see that some of those acquisitions are now starting to take place. Like, for example, the computer vision, some of the computer vision startups that they've acquired. This is really where it comes into play because with computer vision, it can now recognize things and make decisions. Some of the other things in which that they invested in their content, which as it's, I want everybody that's within this space of communication, especially if we're thinking about digital media, this is where it's really going to be the groundwork. It's not going to be about subscribers or about like how many users that you've acquired. Those things are great, but it's really going to come down to content. So the number of Spotlight viewers subscribing to a creator mode more than doubled relative to the prior quarter. Over 20 Spotlight creators are also syndicating shows as Discover, including beauty entrepreneur Patrick Starr or all these other people, who each reach 5 million Snapchatters with their shows. So essentially, they're starting to set up mini shows within Snapchat that are ultimately creating pretty much content drivers of audience that ultimately becomes monetizable. So pretty much in Q4 2021, 25 different Discover partners, over 50 million unique Snapchatters globally. So again, they're growing. They're starting to pick up. And it's funny because they said that they partnered with Kim Kardashian, West, and Kris Jenner when it's kind of funny because around the same time, a few years ago, it was one of the Kardashians that ultimately spoke negatively about Snapchat, and ultimately a lot of users left the platform after that, that infamous rebrand. But again, tons of highlights in which that they've seen, because this is the moment, like when you're profitable, strut your stuff, talk your stuff, because you deserve to do it. And exactly that's what they did. From top to bottom, hands down, essentially they're letting the world know that these are all the wonderful things in which they've done. Now let's get to the revenue globally. So you've seen over the course period of time over the year, they grew by 42% globally. They grew 41% in North America, the rest of the Europe 48%, and the rest of the world is at 42%. Average daily active users up 20%. North America, though, something to watch on that number, up 6%. We're going to see if that number grows this year. Europe 11%, and then the rest of the world is letting you know where it's really used, up 41%. So it's kind of like giving us little pieces in which that it's telling us, for example, this is their revenue by geography. So as you can see, North America and Europe take up probably a vast portion of that, and then the rest of the world kind of is the filler. But then you also have the daily active users, which we talked about. And then we get to this part, which is the average revenue per user. So remember when we said the cost per user was about, or the revenue per user was about $4.06. This is really comes in. So in North America, it's 33%, Europe 33%, and then the rest of the world 1%. So that's going to be something in which that we're going to be looking forward to over the rest of the year, and looking forward to see if these numbers over here at the rest of the world can improve. Because this is good just to start, just to let us know that, okay, hey, you're now reaching multiple continents, but now we got to start seeing that that actually turns into revenue. So average cost of revenue, as you can see, infrastructure cost is very much so huge. And then, of course, the content and developer partner costs, which kind of similar to Netflix, we can see that that's where the cost really starts to sink in for any company. The same thing is hitting Snapchat, and then the advertising partner and other costs. As you can see, that's kind of like the smaller portion, which makes sense because the cost to literally put together advertisement models, it's fairly cheap. So then when we look at the expenses, again, general administrative, less, but then ultimately their sales and marketing, which is their bread and butter, which leads to probably some of their strongest revenue, is there. And then, of course, research and development. Having strong R&D is pretty cool, and it lets us know that over a course period of time, over 2021, they were making significant investments. I really do hope that it pays off for them this year because, honestly, they deserve it. So this is really where it came into play for them. So if we think about it, we saw essentially a insurmountable amount of, say, for example, loss going all the way back from starting in Q1 of 2021, where they started. And then here we are in Q4, where during the holiday season, they did pretty well. So the question is, what will that look like as now that we've crossed over this barrier? And my guess is, like, I think that we should probably still see some growth, but don't expect, astronomical hockey growth all of a sudden. This is still a work in progress, but at the same token, we're seeing progress. And then it gets into the part of, like, pretty much the, operating cash flow and, pretty much free cash flow, and which is that number that Wall Street liked to see, which is $161 million. So congratulations to them. That is Snapchat.
Do you see any potential acquisitions on the part of Snap with that cash that they have?
Yeah. I mean, I strongly believe that they'll consistently keep buying up, small augmented reality, small companies that focus within within the space of computer vision, augmented reality, maybe even also in some hardware spaces, like drone technology. I think that those are kind of like the bread and butter, and typically when you start to see those types of acquisitions, they tend to repeat themselves, just with probably small iterations as the trend continues to keep evolving. But I think that they're going to probably stay within those spaces to utilize artificial intelligence to literally recognize things, and then essentially move into a space of, bringing AR, most likely, now that we're going to probably start seeing augmented reality into glasses tech. So I wouldn't be surprised if, they play a role in that also.
Okay. Up next, we have FTNT's earnings.
Okay. Okay, so here we have for Fortinet their fourth quarter results and 2021 financial results. So pretty much, long story short, total revenue was at $963.6 million for the quarter, up 29% year over year. Product revenue $378 million, up 31%. Service revenue up 27%. Pretty much solid. I mean, cash paid for share repurchases also at $571.8 million. So that lets you know that essentially that they're very profitable. Let's look at the full year 2021 highlights. All in all, last year brought in $3.34 billion, up 29%. So again, product revenue 1.26, service revenue 2.09. So their service revenue is definitely probably one of their strongest sectors. Billings of about 4.18, so there's still some revenue that's still there, that's out there. And bookings 4.33 billion, up 40%. Deferred revenue, 3.45 billion. This is something to definitely pay attention to, though. That could possibly, maybe even have possibly spooked investors, but not heavily. But given in the high interest rate environment, something that you definitely want to pay attention to when you look at deferred revenue. Cash flow from operations at 1.5 billion. Cash paid for share repurchases, 748 million. So I guess apparently they did a significant amount of their purchasing pretty much towards the end of the year. And then free cash flow at 1.2 billion. Again, dope. Well done. Let's move forward into some of their guidance, because it's pretty much reading a lot of the stuff that we saw just earlier as a highlight. So for the first quarter of 2022, they expect revenue in a range of 865 to almost 900 million. The reason why I say almost 900 million, because here's the thing that I want people to pay attention to when we look at things like guidance. These kind of set the trends as it pertains to what those potential whisper numbers will be. So I want you guys to understand that. So they're giving you the low and they're giving you the high side. Now, of course, you have to go back and look at what they've done in the past as it pertains to what, literally, what is it that their past performance is. Now, of course, past performance doesn't dictate future performance, but it's something as a benchmark, so that way you can use that to say, okay, hey, are they getting better quarter over quarter, year over year comparison? And essentially from here also, you can also start to put into perspective of putting together your consensus of where might they fall as it pertains to that whisper number. So anything above $895 million in revenue will definitely be the Wall Street whisper number. So I'm probably guessing about 902 million would probably be the whisper number. Anywhere from 895 or 896 to that high side number that I just gave you, that's your whisper number. Billings in the range of 1.05 billion to 1.09 billion. Pretty much, yeah. Fiscal year, they expect pretty much a solid beat across the board. Looks like about a double-digit, probably about a double-digit return. Probably about maybe between 9 to 10%. So honestly, solid year for Fortinet.
Nice. And I forgot to put this on the record earlier, but we have to go over Amazon's earnings. But before we do that, there is a question. And this is a question about trading, like as a career. So the question is, mathematically speaking, can someone build a sustainable career with trading alone?
Yeah. I mean, it requires a significant amount of discipline. And of course, honestly, I mean, I don't see how you can't do it. It's definitely very much so feasible.
Okay.
Yeah.
Well, thank you for answering.
Yeah, I mean, here's the thing. It's like, can everybody be a day trader? Or can everybody be a trader in which that they can do this as a career? Probably not. No. Especially when we talk about playing on the short term, or trading on the short term, even in sometimes the midterm, especially when they don't know the cycles and everything else. Like when you think about the traders that make this as their daily living, like they study this with a significant amount of focus. They put in the practice. Like even when they're not trading, they're practicing. They're literally, it's like an athlete studying up to be better at their craft and also putting time in the gym. If you're not that type of person where you're not going to do that, then honestly, you're only doing yourself a huge disservice. And honestly, it's like, there comes that moment in time where it's like you have to be just honest with yourself and say, have I actually put the time in? Am I putting the necessary work in? A lot of times people come out overly optimistic and even sometimes downright cocky because every now and then they get a trade right. But to build this as something that is a career, it's definitely doable. How do we know this? Because there's tons of folks on Wall Street that work as traders that sit at trading desks every day to receive a paycheck to do exactly what folks who want to do it by themselves do. The only difference is that their bookings are backed by a large institutional firm or an institution, versus the only person backing you most likely is yourself.
Mm-hmm.
And that's where essentially it's tough. But again, if you're willing to put the work in, put the practice in, and also, like not cheat yourself when it comes to the studies, and also be very, very disciplined in your process, yeah, you can do it. You can definitely do it. The biggest, like some of the things that where a lot of folks give up easily is when they take people don't know how to take a loss. They don't know how to take a loss. And it's like, truth be told, a lot of folks also don't know how to take wins either. When you're right, or when you had a trade that was uber successful, you don't know how to take a win and be like, all right, rolls off my back, on to the next one. Versus, oh, celebrate my limelight and my greatness, like recognize the floor that I walk on or the air that I breathe and everything else. And then honestly, no. The market's not going to do that. The market doesn't care. So I think that, again, it's like there's certain things that need to be, that there's certain things that would need to transpire. But yeah, I'm not going to tell anybody that they can't do something if they don't set their, if they set their mind to it, and if they put the necessary work in. What you put in, you get out. And a part of that is also in the sense that sometimes it's not going to go your way, and if you have the discipline in the process, you'll be able to quickly rebound from those things, just like you'll quickly rebound from the wins, and just, systematically move on to the next thing.
Okay. Another question here. So we have RK is up in the aftermarket about by 3.77%, with some buying volume. And the question is, Mark, what are your thoughts on ARK and how it's doing versus your conviction from last year?
My conviction with ARK is still very much so solid. They had a bad year, and then ultimately a lot of the companies that are innovative, we always see this happen from time to time, and know that for a lot of you at home, you're experiencing this for the first time. I remember once upon a time the companies when XLK went through the same type of scrutiny that ARK did. I remember when companies like Facebook, Google, Amazon, Microsoft was just kind of like floating along the radar. It hadn't even blown up yet because of Steve Ballmer was still there. Apple was still trying to get its footing after Steve Jobs had passed away. And there was a ton of other companies like Tesla. Like everybody thought that was just like a Silicon Valley joke on Wall Street, and everybody looked towards like the older companies like Exxon, Chevron, GE, Boeing, all those companies, which are still some of them are still very solid companies. But it's like they had their moment in the sun, and then those other companies started to take shape, form, and fashion. And the reason why I'm so convicted is because after seeing this so many times within my life, within my career, you kind of like start to just say, okay, history, all right, I'm not gonna fight. Pretty much what's gonna happen is, spoiler alert, what's gonna happen is a lot of these companies, not all of them, but a lot of them, will pretty much find their footing, and then essentially, just like Snapchat, they will find a way to prove to the market that not only do they belong here, but essentially that they deserve to be given a second thought as it pertains to rethinking what leadership looks like in the market. And it's just really, really hard because of the fact that, again, you have this constant butting of heads as it pertains to mind and vision, even within Wall Street and in just the individual retail investor markets. You have older Wall Street that says, no, stick to these companies because their balance sheets and everything else is solid. You have young companies that are saying, okay, hey, yeah, we get that part, but these companies are the future. This is our time to essentially stake our claim here. And at this moment in time, the only thing that really ends up as the sacrificial lamb are the same companies that sit within those portfolios. And I think that honestly, it's like the thing that we gotta like look at that really draws me to ARK, that really makes me hold that conviction on a long-term basis, which holding that conviction on a long-term basis, you're going to have people that will make fun of you. You will have people that will literally mock you. You will have folks in which that will say everything underneath the sun. But I don't care, because at the end of the day, I still have that conviction there. And ultimately, I know what these companies can do and what they will do when their time comes. And normally when you look at any company that is showing you strong signs of either innovation or reinvestment, sooner or later that reinvestment back into the company, or that innovation and that R&D that they're putting out, sooner or later it shows up full front and center. And by that time, the market's like, well, where did this come from? It's been there all along. And so for me, the reason why I like that is because of the fact that ARK is staking and they're standing on that conviction. The other part that I like about that is that, you know, the other part is, name another ETF fund out there that is that transparent to tell you what it is that they're buying and what they're selling on a daily basis. Don't worry, I'll wait. You know, and I think that that's something in which that, you know, it's a gift, but at the same token, it can also be a curse. And given that, like, for example, you had a lot of fintech that got crushed. Square is one of the top companies in there that got crushed and is getting crushed. But then what happens when Square makes its turnaround? You know, after a while, when everything that we've thrown at a company that is negative no longer sticks anymore, then what's the argument?
So we have the last two things that I would like to cover we have about 20 minutes. So in the last two things I would like to cover, Amazon's earnings and taking a look, revisiting the Elliott waves and charting out where we are.
Cool. All right, so let's take a look at Amazon's financials real quick. All right, so Amazon Q4 financial results. This came during their conference slide, so we're going to get through all that. So pretty much free cash flow down 129% year over year. Now that lets us know that essentially that there was a long-term goal here, optimize free cash flows. Pay attention to that one, because ultimately there must be something that's brewing on the other side of the table where there must be an investment taking place. Free cash flow less principal repayments of finance leases and financing obligations down 200%. Interesting. Free cash flow less equipment, finance leases, principal repayments, and all other finance leases down 167%. Now, I wonder why these things are down. Now, of course, you know, let's get to the stuff that ultimately starts to discuss it. So in Q4, $137.4 billion in net sales, up 9% year over year. You know, if we look at this, let me just put it out there. Amazon just told you that they brought in $137.4 billion in a quarter as it pertains to revenue. In Q4 of the same time last time was $125 billion. You're dealing with the law of large numbers, where the numbers will just get so large that ultimately that the percentage as it pertains to the return starts to come down a little bit. So let's look at it. North America, 60% of entire sales. International, 27%. AWS, its own category, represents 13% of that entire model. So, again, something to behold there. Net income, $14.3 billion, up 98% year over year. Again, when we look at it across different segments, that's something to be said. When we look at segment results, net sales, remember that net sales up 9% in North America. $82.3 billion dollars. Now, operating income loss minus $206 million. Net sales in international $37.2 billion. Look at the loss. 1.6. All right, so AWS. If you notice, the reason why AWS is always, say, for example, the biggest draw that draws attention is because look at the sales. $17.7 billion in annual or in quarterly, and look at that net income, 48% year over year. That's good because that's their best profit margin. That's their better margin. That's literally the best marginable item on the books as it pertains to Amazon. They keep it very short. They keep it very data focused, but they left it as the final slide where letting you know that, again, you know, for a lot of the things as it pertains to like the sales of Amazon.com, you know, they took heavy hits, especially as cost. But at the same token, you can't discount the fact that, again, this company is still a cash cow. And I guess the thing is, like I said, what do we do when we reach this point? And I think there's two things that literally, you know, where people are finally starting to get off their soapbox when it comes to Amazon. One, the company is showing you that essentially we've reached the law of large numbers. You know, what more could you possibly want from us? We literally generate over $100 billion in revenue on a quarterly basis. That's the definition of a company that's worth over $1 trillion right there. A company that consistently do that. Another thing is the part where we have, like, what everybody knew was the fact of a lot of the supply chain logistics, a lot of the cost issues, a lot of the investments that they were making for, you know, round the clock 24-hour services in order to get products out the door and in a timely fashion. That had a huge cost that hit Amazon. And yet, the question that I'm probably guessing that a lot of investors are asking themselves is, last time that we've seen Amazon take a hit like this when it comes to just operating costs, they came out once when the coast was clear, they came out and smashed it. So again, as inflation woes start to subside when we get to the second half of this year, you're going to be asking yourself this question: where will Amazon be? And either why, it's either going to be the question, why wasn't I in Amazon? Or why did I stay in Amazon? And I think that we're not going to know that from the past quarter as it pertains to holiday quarter. I think we're going to find out starting off in Q1 of 2022. I think that what's done is done across a lot of the companies across the board, whether retail, financials, industrials, real estate, technology, all of them. 2021, we already know what to expect because we saw what the numbers look like economically. I think moving forward, though, we got to look at, okay, hey, now that this inflation is here, how long do we expect it to stay? Will rate hikes have a significant will they have a significant impact? So if we expect rate increases to take place in March, after we see that, so around Q2's earnings, if we haven't seen that this has had a huge gravely impact on Amazon, then how do you value Amazon now? If Amazon can still rock the mic and bring in about 120 to roughly $150 billion in revenue, there's nothing that Wall Street can say at that point. So, of course, we saw a slowing growth due to the fact that, a lot of the activity took place, especially for the holiday activity numbers, took place long before the holiday started, which makes sense. And essentially, they were using a lot of that time when orders were overwhelmed, starting in October, that got pushed towards later on. I think that honestly, that this is probably going to be Amazon's year.
Well, CNBC just posted an article about Amazon Prime's subscription increasing. I didn't see Amazon. I didn't see the Prime subscription on that.
They raised it by $20 for the year.
With that, do you think that I guess like most of these companies that have those type of subscription services are increasing their subscription, for inflation or just because they can. Do you see that? What impact do you think that will have on Amazon's bottom line? Zero?
None. I mean, honestly, I think that it's like you think about it. There's 290 million Amazon Prime users. To date, $20 times 290 million users, that brings you to about, what is that, 5.8 billion. So for the year, that $20 increase for the year is the equivalent of $5.8 billion.
I know I'm not getting rid of my Prime.
No, and that's the thing. It's like nobody's going to get rid of their Amazon Prime services just because of the fact that they decided to raise the price by $20. The thing is, it's going to come down to pricing power. The second thing that you look at is you raise prices as you start to see the premium as it pertains to the offering also rise. So if Amazon is starting to raise its prices, then they're probably putting a higher price tag on the content that they provide through Prime. They're probably also doing it as it pertains to for other services like last mile delivery and everything else. Those are the things in which that cover the cost.
And if they spent, a significant amount on their transportation, logistics, and things of that nature, then it makes sense that would be an increase. Okay.
Yeah.
Well, now getting to the title of the show, are we there yet? Can we look at these Elliott waves?
Yes, we can. Give me 1 second. So let's pull up some beautiful Elliott waves. Let's first look at the SPY, because of course I feel like that's the best barometer when we look at the market. Now, I don't know if anybody saw me do these things a while ago, so if you didn't, I'll just put it out there. Here's your initial Elliott wave where we went through wave 1, 2, 3, 4, 5, and then now correction. Then we go up. We reached a high point, almost came up to this point of 462. That's ultimately our area of where we got to get to in order to break out. But essentially, we didn't make it there, and it makes sense that we're not there. We are now officially in wave D. I posted on Instagram as well as Twitter the other day that wave D had officially started right before the market had went negative. No crystal ball or anything like that, just following what the data says. So we kind of come down to this resting place. So if we bounce off of here and essentially keep moving back up to the upside, then essentially that's how short wave D was. In my projection, though, it's kind of like placing wave D around 441 for the S&P 500, and then essentially we bounce off and then continue back up. One of the beautiful things that you can look at is we have this wonderful thing where it's like the data is also consistently showing us that the Elliott wave oscillator is also starting to come down and starting to dwindle, and ultimately we're starting to go into heading into a bullish manner. Now, of course, there can always be a head fake like you've seen over here in past times, but essentially the amount of time you're starting to see that sellers are starting to get a little bit exhausted. And it's interesting because, like I said last time, I set the line from the starting point of where we first had our first drop that started this larger Elliott wave cycle, and essentially I drew it out, and then essentially I took the baseline of this, which was the draw of our strong pullbacks last year, and then essentially from here, this was the line that we stayed on a monthly expiration basis where we kept coming back and pinging and essentially kept climbing higher. So ultimately, the trajectory and the trend shows us that essentially that we are not going anywhere as it pertains to further downside down here, like everybody, proclaims that it's all doom and gloom. The market has officially corrected. We are now in retest. So are we there yet? Almost. Almost. But we still got some work to do on some technical levels here. But outside of that, we're looking at probably around 441, in which that we'll probably start seeing some activity. At the very, very least, we probably see it around 4. Let's see here. We're a little bit. I'm going to say 439. So let's see. Looking at some of the other companies, well, as you can see, where Snapchat is currently in the aftermarket, we can see that Snapchat is probably around here, close to the 39 range. We got to figure out exactly what this is going to look like. Is this the beginning of us starting to see Snapchat going on its retribution tour? Again, if that's the case, then Wave D will start for Snapchat here, which makes sense. But don't be surprised if essentially after this week and after the, pretty much, the early jolt in the market, don't be surprised if you also see some profit taking and also some rebalancing. The biggest thing to understand here, people, and I wanted to get into it tonight, was know this, corrections are not something in which that you should fear. They should be literally the moments in which that you look for your openings as it pertains to starting, the next journey. They take time, and they can sometimes be a little bit choppy, and especially creating volatility. But for the most part, again, don't fear corrections. Do not fear them at all. Look at them as moments in which that either, hey, simple profit taking, or possible opens and entries for getting into amazing stocks. Speaking of stocks, the focus this year will probably be, especially in this type of an environment, is to look at companies, not only just look at tech companies and consumer discretionary and communication, because we know who they are, but look towards the other companies. Like, for example, why are some of the other good companies that are out there in the market crushing it? Has anybody looked at insurance companies by chance? Think about it like this. I wonder how their earnings are going to sit. When you look at insurance companies, people are still paying their insurance, though that you don't have to really worry about, like, for example, that many insurance claims. So essentially, if the company doesn't have to worry about the claims that are taking place for insurance because everybody's been staying home, then that's just essentially just revenue that's just coming through, and that's just recurring cash flow. Yet we sometimes miss these things. Companies to look at, like ticker MKL, which is Markel Insurance. The reason why I pay attention to Markel, because you guys know I'm a Tesla bull, all day, every day, mutant and proud. Markel Insurance happens to be the leading company that is one of the leading insurance companies out there, one, and then two, one of the major carriers as it pertains to Tesla's insurance. So as Tesla Insurance starts to expand, then ultimately that creates opportunity in, say, for example, Markel Insurance, like I said, ticker AKL. And other companies that you should be looking at, companies like Aflac, also many others, like, I'm not going to go through the whole list, but again, something to look at as it pertains to just giving you other things to look at and what is possibly a winner in this market, especially as we see rate hike environments. But again, pay attention. I wanted to get into the economic side, but I could do it, but I could accept the challenge.
Do it. Can you do it in 4 minutes, or actually 3 minutes, because we have to close out?
Jolyn, who am I?
Bougie.
Challenge accepted. All right. So a lot of folks think that essentially that Facebook was the reason why that we saw the market go down. If you were thinking that, then you completely missed it. And here's the things that you missed. For example, United Kingdom raised its rates. They went from 0.1 to 0.25. Very interesting, because last time I checked, where is the U.S. interest rate at? I could have sworn that we're also sitting at 0.25. Very, very interesting. But another thing that what they did was they also raised it again. So they're doing a double interest rate hike, which is going to take them from 0.25 to take them to 0.5, which therein kind of signals a possible opportunity for the Fed to also raise it to 0.25 to stay on par with the Bank of England. Another thing that probably people weren't paying attention to were some of the other economic things that came out. For example, natural gas storage. We learned about that. We also learned about, say, for example, non-defense capital goods, ISM prices paid. Essentially, look at that. Numbers are coming down. ISM services and PMI coming down from its current high prior. So these are all the things in which that we're looking at, and essentially the biggest part is U.S. productivity, 6.6% in comparison to negative 5%. Labor costs, well, 0.3. Durable goods, again, excluding defense new orders, 0.31. The thing to pay attention to tomorrow, everybody and their mama is going to be paying attention to the U.S. unemployment rate, and that's fair. That's cool. My guess is that we probably come up a little bit above 3.9%, and essentially we rest anywhere from 3.92 all the way up to 4%. I believe that essentially that such a thing is not going to stay there forever. And the biggest thing to pay attention out of everything is the labor participation rate. These are the two things that the Federal Reserve will be watching for sure. What is the participation rate? Currently, we're at 61.9%. If the labor participation rate comes down, then essentially that could possibly possibly gives the Fed an excuse to say, you know what, hold up, let's scale back on this one. Things to look at for next week. You know, people will say that it's kind of like uneventful. Not true. U.S. consumer credit outstanding. We want to know what does the debt look like for the U.S. consumer. Another thing that we want to look at is, we can look at the trade balance of goods. That's fine. That only just really comes into perspective when we start thinking about trade deficits and also how we do business with China, of whether or not we also start to remove some of those tariffs, though that I don't think that that's going to happen. Wholesale inventories at 1.5%. Crude oil, again, another thing that's going to be on the horizon. And then, of course, here's the thing that we're going to be definitely looking at coming into next week. CPI numbers next Thursday alongside with U.S. initial claims, though that's probably going to take the cake. But I think CPI is really where the entire market will be paying attention to by next Thursday. What happens here?
Dang, you did it right on time, because now we have 1 minute, less than a minute left. It's 6:29 and some change, and just want to remind everyone to watch Supplemental Sundays this Sunday, 5 o'clock Pacific Standard Time, 8 o'clock Eastern Time. TiVo and AJ will be holding it down, so make sure your notifications are turned on so you'll be the first to know when that episode is ready to go live. Well, actually, it is live, so just be paying attention. Anything else, Mark, before we shut it down, because it's 6:30?
No. Stay objective. Stay tried and true to your research and your thesis and your process. Don't get too wrapped up into a lot of the headline stories. Like, for example, a lot of folks pay attention to what happened to Facebook. And especially if you watch CNBC, that was all that they talked about. And then they just were shouting the praises of Snapchat. Little did they tell you, and once upon a time, back in 2020, I could have sworn that we talked about this. We could probably consult with Father Time on this one, just to confirm it, just to keep me honest. But I could have sworn that around the time that I had spoke about this early on back in the day, where, Comcast has a huge interest in Snapchat, where they invested about $500 million into the company once it went IPO. So think about it. If you have the opportunity to shout and sing the praises and give advertisement to a company that you made an investment in, that you still make investment into, versus a company that you don't really put a lot of investment into, what would you do? So again, not everything that you hear and everything else that you listen to, try to listen to it just for the data. Like, filter out the noise. If you start to do that, then the data starts to sound a lot louder. Just remember that. Keep learning, keep researching. Until next time, I'm Mark Monroe.
I'm jolyngc, and the place to be.
And this was your come up. Don't forget to like, subscribe, and hit the bell. See you in the next one. Peace, y'all.